And TMX Group, the owner-operator of the Toronto Stock Exchange, the Canadian Venture Exchange, and other exchanges, and the provider of other market services, has done very well over the past year as well. It's up 56%. That includes a 1.3% rally today. Well, now it's time for hot picks. Our next guest says there are some less obvious stocks that could be winners under a second Donald Trump presidency, including in the industrial automation space. Let's go to Zeno Mercer for that conversation. He's Senior Research Analyst at Vetify. Zeno, thank you very much for joining us. Why do you think a Trump administration would be good for the industrial space, and particularly these automation stocks that you're talking about?
Yeah, thanks for having me. Look, it's kind of a mixed bag in a way, and I'll start off by saying that we've obviously had kind of a previously rough 18 months in the robotic space and automation space overall. We've had high interest rates. There's been a lot of uncertainty around what to be building in the U.S., even though it's not necessarily like what we should be building. And so now that there's clarity around that, in terms of whether people are building more energy or automotive, or we're even seeing a lot of interest in nuclear. Obviously, there's been record high manufacturing construction over the last 2 years for things like the semiconductor fabrication plants, which was obviously partially due to the CHIPS Act that Biden passed. So ultimately, now that kind of there's clarity there, obviously there's mixed views on how regulation will play out in terms of kind of like safety. Will they reduce or add red tape, things like that, and ultimately. Depending on how tariffs play out, there's still a lot of unknowns, right? But ultimately, there are a lot of companies that stand to benefit from improving certain areas of the economy. Even Elon Musk has talked about this Department of Government efficiency. And ultimately, there's a lot of things that are currently broken. Inflation's high. And a lot of the solutions here are, do involve using and utilizing increased robotics and automation solutions that can actually drive down the cost. We're starting to see autonomous vehicles, for an example. These are still early stages. Maybe that will see faster adoption with a Trump administration. What does that unlock? Well, overnight logistics networks, less reliance on airplanes. So you should see the cost of lots of goods go down. We're seeing lots of nuclear plants come online or projected to. What does that mean? Reduced and more persistent energy resilience across the globe. That's an input cost, especially as we see more electrified fleets. Now, there will be a question of how much interest there is in fossil fuels versus electric. But point being, robotics are used in both scenarios. So it's really kind of a diversified impact there. So ultimately, with lowered interest rates, with clarity here, we do see a lot of pent-up demand. And of course, with new advances in AI, we're seeing, increasingly when the question is how, the answer will be increasingly AI-enabled robotics automation, whether it's logistics, surgery, manufacturing. And if you look at the automotive space, for example, that is an area that has seen a lot of robotics adoption over the years in closed cell environments. Recent AI adoption and enhancements are enabling, more persistent management and safety of robots and automated solutions outside of those four walls. So we're really looking at multiple major tailwinds coming together. It's not necessarily Trump related, but some of them, I think either way, there could have been tailwinds for different subsectors, but this one clearly, it seems like there's a lot of big winner. So far, we've seen interest in, we've seen kind of like a Bitcoin trade and a Tesla trade, but we think that there are, longer tail winners that will appear in a more diversified subset. Okay,
one of them is, one stock you like is Symbotic, ticker symbol SYM. That stock has suffered so far this year. It's down about 33% so far in 2023, but this is one of your picks.
Yeah, so Symbotic is that, it had been a major winner in 2023. It cooled off this year, currently trading around $34.50 a share. It's not a new company. It's been around since 2007. They're AI-powered robotic automation for warehouses. They have a significant partnership with Walmart, and that just got expanded into Mexico. So that's independent of any trade relations at all. That's just they're expanding into Mexico to serve the Mexican market. And there had been a lot of concern about stagnation with this company, whether whether Walmart would even consider expanding. They already have a considerable relationship. So they have a massive backlog, and there's always upside of new partnerships developing. They have a relationship with SoftBank to service smaller and medium-sized companies. That's taking a little bit longer to get legs, but again, there's separately kind of like upside offshoots there, and it's trading at about under 2 times forward sales, maybe closer to the 1 times forward sales. So we think from a valuation standpoint, it's certainly been hit hard, and there's still relatively high short interest that. We've seen a couple companies even in the past week get short squeeze. So not saying that that's necessarily going to happen in the next couple of weeks, but we could see it climb back up to maybe $55 per share if it kind of like the valuations and environment normalizes.